any sort of uncertainty, people always have to be making money. And we find that the big institutional investors, they are going to gold. We find gold prices high, silver prices surged. Silver usually sits around $45-50. It was trading yesterday just over $100 for 1 ounce, like a so big ounce silver coin is trading at over $100. That's about 1,600 rands for 1 ounce. Okay, we saw platinum as well outperform gold and silver. You don't see those kind of headlines in the news. It's something that advisors should be telling you. Right, so that's gold price. Next thing that happened yesterday on the markets, we saw the South African rand dip below 16 rand. Well, it was only 15 rand 99, but it's a big psychological barrier that came about. And it's impactful because there is the potential for the rand to strengthen anymore. Now, this rand strengthening has nothing to do with South Africa, our policy, our economic stability, our production capacity, or anything like that. It has to do with the dollar weakening for the reasons I just mentioned. And it also has to do with the price of gold that has surged because of the various uncertainty that I discussed. So what we're seeing is a surge in South African equities, so equity shareholding. Right? Equity shareholding, the surge has happened particularly with mining companies because when the price of gold, platinum, copper, and all of that go high, South African mines benefit. So share prices have peaked. That will impact your various investments, particularly you'll see in your pension fund that are high in South African equities. There's a sudden surge, mainly because of gold price. And we find the rand dipping below 16 rand as well. So that's kind of a double whammy for the South African investor because when gold surges and the rand weakened against the dollar, we don't feel the full brunt and all those nice benefits of the gold rally. All right. So there's a lot happening. What do you do as an investor with all of these dynamics happening in the world? And first, let's start with the people that are in a post-retirement space. So if you have parents, aunts, uncles, or if you're somebody that has already retired and you're in a living annuity, if you're in GPF, we can't help you. Unfortunately, you're stuck there. But post-retirement, if you're in a living annuity, there's lots that you need to consider, right? First thing you need to be considering is inflation rates. We saw in December, South African inflation went a little bit high. The Reserve Bank should be meeting on Thursday to discuss whether they're going to drop the repo or leave it as it is or even increase it. I suspect they're going to keep it as it is because of that slight increase in December. However, they are predicting oil prices to be petrol prices, sorry, to be dropping a very significant drop in February. I guess we'll only know by the end of the week what that's going to be next week, Wednesday. But if the petrol prices do drop, that will bring down inflation a little bit, and then maybe we can see a decent interest rate drop for the following cycle in 2 months' time. That would be March. So from a post-retirement perspective, a lower interest rate is not good for you. You find post-retirement people being very conservative with their money. They don't want risk. They want certainty of fixed income every month. And you'll find that they will be holding a lot of income funds. All right. And when interest rates drop, the income that you get from those income funds drop. Right. So you got to be looking for other sources for you to maintain the same level of income. Remember, if you were drawing 5%, 5% draw changes all the time with interest. So you got to be a little bit sharp, a little bit savvy, sit with your financial advisor, particularly if you're in the living annuity space, because there's lots of options, right? If you're not comfortable with your advisor and you want it's nice strategies to build because there's so many opportunities right now. So what you should do with your living annuity money to maintain your income or possibly get even more, feel free to book an appointment and then I can help you. If you are in the pre-retirement phase, right? So I would say 10 years or less of retirement, what should you be looking at as a pre-retirement investor? One, you wouldn't want to be taking a lot of risk. All right, you're almost there. You're almost to that finish line of retiring, getting out of your pension and living the sweet life. You don't want to be taking too much of risk. There is a lot of volatility now. But me personally, I'm not a fan of South African equities, mainly because of South African policy that has put a damper on things. There's South African industry is over-regulated, and we have no protection in terms of cheap imports that come in and kill local industry. So I'm not a fan. And I'm also not a fan of the mining policy of the country as well. So mining is doing well because of the price of the commodity, not because we're highly productive and we have new fields and things like that. So I would stay away from South African equities. I'm not a fan at all. What I'm loving right now is oil and I'm loving bonds. Remember, the content of this video is not financial advice. If you're looking for financial advice, please click the link in my bio or go to my website. My brokerage website is solomon.wealth.co.za. Click on the Get Started button and you can book an appointment, a complimentary appointment, and then we can chat. Right. So pre-retirement, 50 years and over, be conservative. There's smart things that you can do. If you're younger than that, you have opportunity for more risk, particularly in the emerging market space. There's lots happening there. And the first thing I would be paying attention to is not when something hits the headlines. You got to be constantly paying attention to what's happening in the markets. And what the big headlines are not reporting is that they're not reporting the smaller deals that Donald Trump is making with with countries like Cambodia, like Vietnam, because he's signing some sweet deals. And those countries are playing ball with his tariffs and things like that, which means that those companies are heavily dependent on the US consumer. And they're playing ball, which means that they have an open consumer market in the United States, and they're getting the kind of deals that South Africa would want that we are not getting. So because those countries have access to America, Trump is signing these deals with them. I would expect those companies to be booming. All right. Maybe we'll say it in a year or two, but emerging markets, Asian emerging markets have done really, really well recently. A lot of that has to do with Trump. And another thing is that this whole surge, this whole AI revolution, I think we're still in early days of this AI revolution. While America is a big player in the software side of AI, Asia is a big player in the hardware side. So they're making those chips, they're making these components. A lot of manufacturing is happening there. So as AI will grow, the makers, the hardware side and the software side will be making money. And for me, that's where I would put my money. Again, the content of this video is not financial advice. All right. Other emerging markets that have been doing well would be South America. They have done well. Javier Milei, that's how you say his name. Yeah, he has done. He's culled the government. He's trimmed the fat, and there was a lot of fat, something that South Africa needs to do. Imagine if we trim the. Imagine if um, our public wage bill wasn't as big, right? If we had less people working, um, and even having the same kind of output, that means there's more money to go to infrastructure development. We would wish if they would stop stealing, but it would mean less taxes for us. So the more bloated the workforce in South Africa, the more taxes we're going to pay. And the more socialism that's coming, when people want stuff for free, the more taxes the productive are going to pay. So the more productive you are in South Africa, you will be punished with higher taxes. All right. Oh, so the South Americans have been doing well. You find the MSCI MSCI Latin American market, that ETF has been doing very, very well. That ETF is actually sitting at around 165 billion. In January alone, about 6.5 billion went into it. That's a massive amount of money. It's the most that it's received in 1 month. So lots of opportunities, a lot in a lot of places around the world, even in South Africa. But be wary of South African equities. All right, it has nothing. The rally, the whole rally in South Africa has really nothing to do with us. We're not solid at all. It's more the outside factors that are impacting us. All right. So if you have any questions, type it up. That's my 2 cents on what's been happening in the world so far in 2026. All right, that's what I've been paying attention to. So I'm just going to go through the questions here on TikTok and on YouTube, and I'll answer them for you. Okay. I don't know how to do this co-hosting thing. All right. So please don't invite yourself on the stream. Okay. If you want me to follow your TikTok channel, it has to be something interesting. Um, all right. Cool. Let's see what's happening on YouTube. All right. All right. Another thing I wanted to let you know about what happened late last year, very late last year, was the new infrastructure bonds that was issued from government. Um, so, what bonds are? And I know when I did my bonds video, people were asking me about the home loans. That's not what I'm talking about. So when the government wants to borrow, the government needs money for services. They need money to steal, of course. And when there's not enough to steal, one, they'll tax us more, and two, they will borrow. And then they will borrow from large institutions like pension funds and like the big investors, the institutional investors in overseas, right? So they issue these bonds. Basically, it's an IOU that say, okay, if you lend us money, and this is like hundreds of millions of dollars, we will pay you interest, and we'll pay you 10% a year, for example. Now, because South Africa was grey listed for a long time, and we had our ratings weren't all that good, we don't have that investment grade rating. It meant South Africa as a nation, it was very expensive for the government to borrow money. So, to entice investors a little bit more, the government will offer them higher interest rates. So, you'll find a lot of your pension funds and retirement annuities and all of that bulk buying South African bonds. And we saw the last quarter of last year, a huge number of overseas investors were buying government bonds in huge amounts. All right. So that's what happens when government needs money. They issue these bonds. So South Africa issued infrastructure bonds that got sold out quite quickly. Ideally, government should be using this money for infrastructure development. My fear, though, is that they would go the BEE route, inflate those prices, and then the money disappears like everything else in South Africa. Right. So government bonds are still solid. They're still a good bet. It's just a matter of finding the right kind of bond. I'm not a fan of buying direct bonds, mainly because I can get them at a discount in other places. And also, there's a bond strategy that you deploy when working with bonds, because there's tons of bonds. There's those fixed rate bonds, those inflation linked bonds. So there's a mix that you can get. You need a strategy for it. And the same way that government issues those bonds, companies issue this as well. So you find a lot of income funds holding corporate bonds where big companies need to borrow. So they will issue bonds, big institutional investors go and buy those bonds and they repackage it to you as an income fund, for example. So you hold a lot of debt there, government debt and corporate debt. So those are some nice options that you need to be aware of. If you don't know how to get these things, obviously you speak to an advisor. If you don't have an advisor, you can book an appointment and I'll be happy to help you. All right. So the one question that I have is around retirement annuities. Okay, I'm going to come to that crypto question in a little bit. Retirement annuities. Can I have more than one? Yes, you can. So how it works is, let's say, for the sake of my mental maths, and it's very hot and very late in the day, you are earning R1,000,000 a year, right? So the legislation tells us that you have the ability to contribute a maximum of 27.5% into traditional retirement funds. And this could be a combination of your pension, your provident, and your retirement annuity, right? Those are your three pre retirement contribution products. You also have preservers, but you can't make regular contributions to preserver. This is when you resign from somewhere, you take your pension or your provident and you preserve it. And in that preserver, it follows the typical retirement fund rules, right? So you can contribute 27.5% of your income into traditional retirement products. And the benefit you'll get from that is you'll get a rebate in the next tax cycle, provided that all of the other rules regarding the tax formula are followed. And you'll find employees specifically, because their income is fixed, their deductions are fixed, you usually know what you're going to get as a rebate in the next cycle. For entrepreneurs and people that have flexible income, it's a little bit different, especially people that are earning rental income or interest income, because it fluctuates. However, what happens if you over contribute? Right? If you're earning $1 million, you can contribute 275,000. What happens if you put 300,000? All right. In that case, if you're earning $1 million and you put 300,000 into traditional retirement funds, the 275,000 rands will be tax deductible, where you will get that benefit in your next tax cycle in terms of that rebate, if everything is correct on the formula. What happens to that additional 25,000? So that additional 25 kind of rolls over. And if you do this long enough, what happens is Section 10C of the Pension Funds Act kicks in, meaning that when you do retire, all those contributions will be tax-free, right? Until you deplete it. So maybe you can have the first year, or even if you're smart enough, first 2 years, you can have tax-free income utilizing the 10C. Right? I know a lot of people always focus on that 11F, the tax deductibility, but if you're smart enough, you can utilize 10C as well. Right? These are the kind of strategies that a financial advisor will be putting together for you. So if it's something that interests you, book an appointment and we can chat. Okay, next question. Let's say I'm invested in crypto and I have a registered complaint, but the crypto is in my name on the exchange. My question is, I don't want to own it, but I want to control it. How do I do it? You don't want to own it, but you want to control it. How I would do it, I would not own it in my name, obviously. One, you'll own it in the business, and the business can sit in the trust. The problem is the taxes. Business tax is kind of fixed at the 27%, right? It's just that it's how you access this crypto, and the wrapper you have around the crypto can be a little bit tricky. Taxes on the trust are a little bit higher. You want to use that trust as a conduit, but for the sake of taxes, I like endowments for crypto. Mainly because the crypto gain is a capital gain, and within an endowment structure, that capital gain is at a fixed, a net effective 12%, which is super low. We'd be begging for 12% taxes, but it's there available to you inside an endowment. So it's about how you structure that endowment and the kind of assets that you pick within it. Right. I think there's a lot of options for the crypto. I would book an appointment and then we can give you structures a little bit more better when we understand a little bit more about your tax liabilities and all of that. All right. So if there's no more questions, I'm going to sign off over here. Remember, if you need financial advice, if you want to chat to me one-on-one about your money, go to solvenwealth.co.za and book a complimentary appointment and we can chat. All right, so you guys have a good night and we'll do another live soon.